right, everybody, thank you. I appreciate everyone being here. I appreciate that everyone's here and listening to my talk and not just here to save a seat for the next guy. So, hi, my name's Matt. I've been working on open source Bitcoin for about a decade and a half now. Thank you. I've worked on Bitcoin Core for about a decade, worked on Lightning, worked on mining software, worked on sidechains. You name it, I've probably worked on it, and almost all of it open source. But more importantly, I've spent most of that time engaging in debates about what Bitcoin is and how to shape Bitcoin into the best trustless money that we can build. More on that in a second. This talk's a bit of a reset. There's tons of excitement here, and Bitcoin is exciting. Frankly, I never thought we'd get this far. But Bitcoin is at a crossroads. And I think right now is one of the most critical times in Bitcoin's history. One that will decide if Bitcoin stays Bitcoin, or if Bitcoin gives up on its goals entirely and turns into something different. Because if we screw this up, we don't get another shot. So we're going to cover a lot of ground. Hopefully it's very informative. Hopefully you learn something about Bitcoin. And hopefully you learn a little about how you can help, and how you can help make sure that Bitcoin is the best money we can possibly have. But first, we have to talk about what Bitcoin is. Certainly, if you ask everyone in the audience here, they'll probably give you a different answer. They're here for many reasons, whether it's freedom from the Fed's money printing, they're worried about inflation, whether it's here or especially in other countries, but also inflation's pretty bad here now. Whether it's because of a desire for uncensorable money, money that they can choose what they want to do with, where there is no one who can tell them otherwise. They can receive money, they can send money to who they want, no one can stop them. Or maybe it's because they want freedom from universal financial surveillance that has pervaded this world. Of course, sadly, Bitcoin isn't just not private by default right now. In fact, Bitcoin currently reveals all of your transaction data to everyone in the world, making Bitcoin possibly less private than the existing financial system. Which, of course, is also why many people are working on improving Bitcoin's privacy so that we can at least be as good as the traditional finance system. But ultimately, all of these different things that people care about Bitcoin for come down to not wanting to trust someone. There's someone in their transaction flow who they don't want to have to trust to be able to transact. And ultimately, this property is core to what Bitcoin is, this property of not wanting to trust someone, of trustlessness. And because this property is so core to what Bitcoin is, it is something that we have to hold dear and that we have to fight for. We cannot let it be compromised, because it's ultimately why we Bitcoin. But what does this trustlessness mean? Where does it come from? How do I, as a software engineer, write code to make sure that Bitcoin is trustless? You don't have to trust anyone when you transact with Bitcoin. Now, obviously, there's a lot of different pieces to that. First of all, and probably many of you know this, and this comes to mind, is that every node verifies everything. Every node verifies that there's only 21 million coins. Every node checks that every transaction has a cryptographic signature on it. That means that only the authorized owner of those funds can transact them. And whether you're running a node yourself personally to transact on, whether you're using a wallet where the wallet vendor runs a node that verifies everything, or whether you're using a custodial provider that ultimately also runs their own node, somehow, directly or indirectly, you are verifying every single transaction that happens in the network. And this means that you don't have to trust anyone. There is no one who can lie to you and tell you that there's more than 21 million coins, just like there's no one who can lie to you and tell you that they took their money and sent it elsewhere, because you're verifying everything. So that's all great and dandy, and that's how all the software's worked since day one. But maybe more interestingly, there's a question of how do you make sure that the rules of Bitcoin, all these great properties that I just talked about, remain the rules of Bitcoin next year and in 10 years. After all, if you bought Bitcoin because there's only 21 million coins and you care deeply about that property, how are you sure that what people call Bitcoin in a decade will still only have 21 million coins? And for those of you who weren't around during the block size wars, that's what it was all about. It was about how do we change Bitcoin, and what are the processes through which we do so, and how do we make sure that every single person, every single Bitcoiner has a voice and can say no, can say this changes a fundamental property of Bitcoin that I cared about, that I based my investment thesis on, and you can't change that. Now, luckily, the Civil War resulted in a conclusion that Bitcoin can only be changed by everyone having a voice. The Civil War of the block size wars resulted in a trustless Bitcoin. But there's one property of Bitcoin about making Bitcoin trustless, that's always been more speculative. And that's obviously mining centralization. Ultimately, you cannot transact if a majority of miners says no. A majority of miners can reorg the blockchain and prevent your transaction from confirming. In nearly every way, they're not, but specifically for the property of censorship resistance, and as long as mining is centralized, miners are a party to your transaction. And remember, the whole goal was that we have no third parties involved in our transactions. If mining becomes decentralized again, there's lots of companies that can mine your transaction, and you don't need to worry about it. There's not only not a single miner that can stop your transaction, but there's also no group of similar miners that could stop your transaction. From early on in Bitcoin's history, there's been a lot of discussion around this centralization problem. Mining has largely always been centralized throughout Bitcoin's history. First, people thought that ASICs were the problem, tried to come up with ASIC-resistant proof-of-work functions. Luckily, we grew out of that phase, and we recognized that ASICs, in fact, improve decentralization, at least simple ASICs. Then people thought that mining was entirely capital expenditures, and concluded that they could entirely cut out the middleman, replacing proof of work with money directly via proof of stake. This, in spite, of course, being that money is highly centralized, has always been highly centralized, but it works great if you trust the people with money, which these days, of course, is just the ETF custodians, which means proof of stake works really great if you just trust Coinbase. But through all these debates, one thing has remained constant, and that is Bitcoin mining has not, in any meaningful sense of the word, actually been decentralized. And to be clear, this is not an indictment of proof of work as a concept, nor Bitcoin's proof of work. Bitcoin's hash power has gone through periods of centralization, but today, Bitcoin's hash power is incredibly decentralized. It's operated by many countries across many countries all around the world. But what has been centralized since hash power moved beyond CPUs was pools. And make no mistake, that pools are the miners. They select the transactions, they have the ability to censor, and they decide what block to mine on. All those people who own and operate ASICs in these large mining farms, they're really just clients doing work for these pools. They're not miners. Now, at this point, you may be thinking, well, Honey Badger doesn't care, right? You've used this slogan many times over the last decade, and it's always largely been true. After all, most people who criticize Bitcoin tend to be highly misinformed about how Bitcoin actually works. But don't confuse those people for genuine issues that we've simply gotten complacent about and that will eventually catch up with us. There's a lot of people who come up with arguments as to why it's OK that Bitcoin mining is completely centralized, but largely they're arguing to justify the world that we're in and not being realistic about the reality on the ground. A lot of people argue that hashers will simply switch pools if the pool misbehaves, right? But ASIC operators don't really have any real ability to respond to pool misbehavior unless they're actually monitoring for the pool misbehaving. In fact, there's only really one person in all of Bitcoin, maybe 2 or 3 now, who monitor what pools are mining. That's this guy OXB10C, so everybody give him a shout out when you go on Twitter later. But the idea that miners would switch is total nonsense if they're clearly not monitoring what their pool is doing because they simply wouldn't know that their pool is misbehaving. Or you may be thinking at this point, well, Bitcoin's incentives will fix this. Bitcoin's a beautiful incentive system. Miners are incentivized to care deeply about the value of their investment and the value of Bitcoin. But sadly, I don't buy that. Bitcoin has become a $1 trillion asset with completely centralized mining. investors largely don't care, or at least they don't care until it's too late. As long as centralized mining is not a problem that's being actively exploited, they're happy to live with Bitcoin. And if it becomes a problem that's actively exploited, they'll simply sell and move on. Those of us still holding Bitcoin will be pretty sad. Luckily, there's actually no need for this. This whole concept that the pools are the miners, there's no technical reason for it. It was just a shortcut taken by the existing protocols that were developed called Stratum. And we can fix this. In fact, thanks to the resources of Spiral, my employer, as well as a handful of miners, the work of many folks, software to fix this, called Stratum V2, has been built. But miners, and more importantly, pools, need to adopt it. There's some initial excitement from a few pools. You can probably guess which ones. But the vast majority of hash rate clearly doesn't care yet. Sadly, this also isn't the first time we've had the software to fix this problem. In 2012-2013, P2 pool was a material part of Bitcoin's hash rate. It operated completely free of centralized parties. Every hasher involved in the network picked their own block to work on, and there was no custodian who managed the reward splitting. But sadly, for some social reasons, but mostly decisions made by Bitmain, P2 pool died off. And the technical community around Bitcoin, people like myself, failed to pick up the mantle. There's some very early work on a technology called Braid Pool, which is starting now, which might revive the dream of P2 pool, but it's fairly early. Sadly, and maybe more importantly, the mining community also failed to pick up the mantle and work on decentralization more broadly. Mining is a highly competitive business with margins that vary but are often very thin. Thus, these firms have generally been focused on investing in their short-term business needs and not the long-term needs of the Bitcoin network. Few miners aside who have been helping fund Stratum V2 and other efforts, but they're a small minority. Worst, over the last many years, the mining industry has never invested in reducing the counterparty risk that they have with pools. They've never operated private P2 pool instances between different miners to build their own custom pools without having any third party that they have to trust with their money. But luckily, now Stratum V2 exists. And to be fair, the mining industry hasn't really had a lot of time to adopt Stratum V2 yet. It's only in beta now. But the time is now for them to do so and for the mining industry to get off zero. While a few pools have just started to work on Stratum V2, and some companies want to create new pools, shout out to Demand Pool, who's trying to create a new pool based on Stratum V2, many pools don't care. Much worse, Bitmain has been quietly consolidating power, operating many other pools in secret as fronts for their own control of Bitcoin. Don't tell me miners are going to switch if a pool misbehaves when they found out that their pool was secretly a front for a company with Chinese Communist Party ties, and they didn't switch pools. Worse, Bitmain has now driven the fees for pools down to zero to make sure that new entrants can't make enough money to sustain themselves before being outcompeted. Of course, with all this negative news, it's easy to get dismayed about where Bitcoin is going, or maybe where Bitcoin is not going. But it's all the more reason why the people here need to go talk to the people on the mining stage and convince them that they need to start investing in this problem, to think hard about a problem that most of us are used to brushing under the rug. Because there are solutions. These solutions are starting to become available today, but we need miners to adopt them, and we need to break the hold that Bitmain has on this industry. Because without that, Bitcoin will continue to lack its most important property. Of course, all this only works as long as small miners can compete. Bitcoin's hash power is incredibly competitive business. After all, it's designed to be nearly perfect competition, perfect capitalism. Most miners pay a fairly similar cost for power, and with such competition, margins get compressed more and more. Thus, if you make a little less money than your competition while paying the same cost for power, and your margins are compressed, you're just going to start losing money, and you'll eventually go out of business. Now, luckily, this isn't actually a problem we have in Bitcoin today. But we can look to other cryptocurrency systems to see what happens if this does become a problem. With expressive scripting in a cryptocurrency and advanced smart contracting, this can start to fall apart. We've seen this in Ethereum, where thanks to smart contracts and complicated smart contracts, there's only 3 or so companies that are capable of building competitive block templates that maximize revenue. Everyone else building blocks in Ethereum gets paid substantially less. This is what I've taken to calling Meevil, or Evil Mev. Which, OK, in a proof-of-stake system, this is OK. You can build a block and get paid a little less than your competition, not the end of the world. But like we just talked about in Bitcoin, if you get paid less than your competition while paying the same amount for power with very compressed margins, you're going to start losing money, and you will go out of business. In Bitcoin, this would be a death sentence. This would leave only 3 companies, or really 3 pools, able to continue to profitably mine Bitcoin, with everyone else going out of business. Luckily today, Bitcoin doesn't have this problem. Our smart contracts aren't expressive. People generally use Bitcoin to move money and not to trade tokens with automated market makers. But increasingly, there's a push for this to change. Bringing based rollups to Bitcoin, or possibly even just sufficiently complicated on-chain scripting, may be enough to bring this centralization to Bitcoin. What this means for Bitcoin and these options to add more extensibility, I don't really know. As with many other developers, I'm also very excited at the potential that all of these new advanced ideas people are coming up with could bring. These new features might allow us to create systems where you can transact with Bitcoin highly efficiently, somewhere between the properties of custodial and non-custodial. But the risks are also high. And like I said, we should never compromise on trustlessness. Because after all, that is what Bitcoin is all about. Doubly so not when you get to the then they fight you stage. Obviously, Bitcoiners have historically been quick to say that the powers that be are fighting us now, but there's no clear line for when that starts. There's enormous pressure on politicians and regulators to get the most visibility and control over the world that they can so that they can prevent bad people from doing actually bad things. But of course, the tools they build to do so can also be used to prevent good people from doing good things that either politicians hear or under oppressive regimes, or in some cases, simply Visa's CEO don't like. We can already see the storm clouds on the horizon. With the Samurai and Tornado Cash cases, dissidents who speak out about bad activity from their government have been put in peril. There won't ever be an all-out battle. But all of the properties that matter to us, the many forms of trustlessness, do not come for free. Regulators will apply pressure to any centralized parts of the ecosystem to get the control that they want. Centralized companies will ultimately be regulated to do what gives law enforcement the most control, because that's what makes their job the easiest. Our job is to make sure this only affects the on and off ramps, where money laundering can be addressed, but not impact the network itself, which would prevent people from being able to use Bitcoin. Make no mistake, the rules will be based on the properties of Bitcoin in practice, not the theory in our heads about how Bitcoin works. Because Samurai was a centralized party, regulators targeted it to prevent people from getting privacy. If the way people were finding privacy on Bitcoin was a decentralized protocol, not making money for its developers, this wouldn't be the situation we're in. We had Join Market, but the extra cost of using it, plus the worst user experience that it has, means that people often don't use the best tools that we have. Don't be confused by the politicians up on this stage. Expansion of state authority only goes in one direction. And worse, in this country, it doesn't require the president nor Congress to do that. The Treasury Department today has enough authority to make trading Bitcoin non-custodially impractical and de facto illegal in this country. Still, of course, Bitcoin remains highly centralized. And while it remains highly centralized, engaging with regulators and policymakers is critical. So we should celebrate politicians who are willing to engage with Bitcoiners on substantive policy issues. But if Bitcoin mining remains centralized, or if Meevil becomes a problem and mining becomes forever centralized, regulators will eventually regulate the centralized parties that they can target. If we aren't set up for success by the time that that comes, we may well lose the properties of Bitcoin that matter. This isn't a call for battle. Rather, it's a call for focus. Bitcoiners need to focus on the things that give Bitcoin value and build for it. When a shiny new thing is announced that comes along that's exciting, ask whether it builds towards a truly trustless and sustainably trustless Bitcoin. Trustless things are harder to build, often much slower to build. Celebrate the small victories towards that end. Use the decentralized options. Don't use Tornado Cash, Samurai. Use Join Market. And provide feedback to the developers to make it easier for the next person who comes along. Trust me, all the developers want the best user experience we can build, but we can't if people don't use the decentralized options. Thank you. Builders, when you're thinking about your next project, pick the hard thing, not the easy thing. And be willing to build a nonprofit, not a company. When you think about investing, especially investing in miners, or especially pools, ask whether they are in turn investing and making Bitcoin sustainably decentralized. Or whether they're driving us towards another civil war where we are forced to wrest the decentralization back from entities that should be providing it. I know this may sound dark, but it's only because Bitcoin is worth fighting for. We've been given an incredible opportunity with Bitcoin. Genuinely the best money we've ever had. And we've come an astoundingly long way towards that goal. There were many risks involved a decade and a half ago that never turned out to be a problem. Thanks to hard work, but also a little bit of luck. Things are better than they've ever been. But that also means that we have to fight for what makes Bitcoin Bitcoin and to make Bitcoin as good as it can be. Thank you.
Next year, we are bringing the Bitcoin conference to the American West, Las Vegas. The brightest minds in the world will converge to deliver Bitcoin history. Buy your tickets now at b.tc/conference/2025.